Good morning. It is March the 1st, 2018, and Jerome Powell speaks again today in Testimony on the Hill. Jerome Powell broke the market on Tuesday when his comments were interpreted as hawkish. He basically restated what the Fed has been saying all year in their guidance and Fed governors' speeches, but the market took it as hawkish, more hawkish than it was before. And we'll see if that happens again today. The Q&A session will make the market vulnerable to new spikes just like it did on Tuesday. Start with a disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any uncertain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with the benefit of hindsight. No representations being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, we had lots of news out of the EU, UK. Inflation is what it has been, not as high as they'd like it. The economic news was generally supportive, as forecast. On the right side of the ledger. Some of it was a little lower than forecast. I believe Italian unemployment was probably the worst number. Didn't see any news out of Asia. Their news hit yesterday where they had huge misses in Japan and in China on all their economic numbers. Today, the United States has a lot of economic numbers hitting the tapes. The biggest will be Powell's testimony, specifically the Q&A. That starts probably a half hour into his testimony before today's committee. So, jobless claims, 230. No one will pay any attention to that. Personal income up 0.2. Up 0.3. Personal spending up 0.2. They'd like to see those numbers reversed if you're a bond player. Core PCE up 0.3. They'd like to see that one lower. PMI manufacturing at 55.7. They'll get a pass, because ISM manufacturing is coming out shortly thereafter. ISM manufacturing 58.6. That one will be paid attention to. Comes as Powell starts his testimony. Construction manufacturing prices, ISM manufacturing prices at 70.5 will be paid attention to. Construction spending plus 0.3. And nat gas storage minus 21B. So this will be the first one out of the chute. This will be the second. And inflation is going to get some attention too. Inflation has not been a problem for 8 or 9 years. It's back on the table. Inflation can move the market, as we've seen with PPI and CPI. And why is inflation back on the table? Because the Fed's raising interest rates and inflation is part of their formula. Okay, first sell 15 to 19. I think we can go a little bit higher this morning, maybe not. But I think we can based on the structure. Then 23.27 for sell 2. 5 to 9 buy 1. 29 to 01 by 2. Looking at the 30-year, we will make the buck to 04, number 1. Sell 7 to 11. 15 to 19. With treasuries, we'll also be watching to see if the Emini falls out of bed. Both of them got slammed the other day on Powell's testimony. Interest rates going higher eventually hurts the stock market, immediately hurts bonds. 24.28 is number one. 17.21 buy one. 9 to 13 buy two. But the danger, the real danger, and I'm guessing the market's probably on hold. We'll trade in a range until Powell speaks. Now, the second testimony usually pretty much ignored. So Powell's testimony could be a dud this morning because he said it on Tuesday. We'll just have to see if he gets really more specific or more hawkish. It can take it slower. Lots of articles out overnight about why the stock market is selling and why bonds should be selling. The crash is imminent. It'll be worse than anything we've ever seen. The Fed's out of ammunition. The Fed's not out of ammunition. They can print money from here to the moon, and they have, and they will. Being out of money doesn't stop those people. It's not their money. They feel like their salaries and everything will be covered, and inflation will be taken into account as they vote themselves money, so they see very, very little risk. And if things get really, really bad, they can all go over to Fort Eustis and camp out for a bit and not get shot if there's riots in the streets. So all these people that work in the government feel that they are exempt from what they wreak on the world's economies, their local economies, etc. Okay, gold is selling. We had 9 right here was the low volume number. We're through that, so stops below the buck is the trading target. Stops below 05, so we'll make 3 to 5 buy one. And then 01 to 99 buy two. Selling 9 to 11. 13 to 15. We've been talking about getting down to 1309 for quite a bit. Gold is in a selling mode right now for whatever the reasons. Tells you that inflation's not part of the gold market's psyche right now, increased inflation. And higher interest rates almost always hurt gold, because you can get paid money on your money and not have to liquidate your asset. In gold, you got to liquidate your asset to generate cash flow. Nobody likes to do that. Euro's headed lower. The low volume number is 2148, so 2150. Our trading targets, so we'll make 55.45 buy one, 25 buy two. Obviously we got a ways to go. We're at 79. I'll put a question mark at 75. On the sell side, 95 to 05 sell one, 20 to 30 sell two. Crude oil got hit again last night, and it's the old argument: will OPEC cut back enough to absorb this increased shale oil production? We had that Libyan force majeure Saudi Arabia only producing 7 million barrels a day in January, February. I believe they said the ramp up starts in March, so there'll be more supply out there. Sell crude. I think that's what's happening right now. So let's go take a look at our F1 screen. Bring a little perspective in. See, we're right here at 61. That's a pretty clean break in the market. Then the next very, very clean break in the market's down here at 60. So then the breakout came at 59, no, 58, 59, 60 to 61. As for the two areas of support are right now. And we are pointed lower. Stops below 75 is where I think the market's headed. So 60.50, 60.75 by 1. 60 even, 60 and a quarter by 2. On the sell side, 61 and a quarter, 61.50 sell 1. A structural sell would have you short at 16 or 17, a limit sell right there. And then 75 to the buck for sell 2. Don't think Powell's testimony will impact crude today. And to everybody's favorite, the Emini. We're right here at the at 2,700, give or take. Right in here is a pretty clean break in the market. Then it falls down to our 2686, so 2685, 2,700 is pretty good support. We're going to test it early this morning. We've already been down to 96. So I think the first move will be a sell, retest support at 2,700 plus or minus. Holds, maybe a little short covering in front of Powell's testimony, then to Powell's testimony. And right here is the selling. We've rejected prices below 27.01. In fact, it's a pretty good seller at 10. So we'll make 9 to 14, sell 1, 19 to 24, sell 2. With the volatility that we can have, I'm leaving these a little bit wide. I don't like to do that, but buy 196 to 01, buy 286 to 91. And a limit buy down here in this 86, 87 area. It's probably the safest place to have a resting limit buy or sell. Going to take a bit to get everything up and posted. I'm going to get busy with that. I will be back as soon as possible.